Okay, welcome back, everybody. Can you hear me? Can everyone hear me? Good afternoon.
Yes, we can. Good afternoon, ma.
All right. So, it's we were supposed to have a stretch of a 3 hour, and then we close for the day, but just allow for the modification in the form so that some other people could join. So if you were not in the first session, please raise your hands and you're joining us for the first time. Hello. If you were not in the first session, let me know, please. Okay, so I assume everyone here is from the first session. Okay. All right, thank you. Okay, so I dropped something on the WhatsApp group. Did everyone see it? Were you able to look at it? On the chat, I dropped something. Were you able to look at it?
Yes. About business, what we are needed to work on, the business plan and the business plan, market research, and intellectual property securements.
Yeah. Yeah, so there's a slide there that it's speaking to the investor readiness. So we'll go on to take our first session. Recall that I said when we started that today we were starting with, okay, so there's a bit of introduction to investor readiness and funding process, fundraising process. So I want to take us through the end in mind, have the end in mind. So what is the investor's checklist? At the end of the day, what are we going to be looking out for when we are talking to investors? So they're looking for your business plan, looking for market research, if you've done any, if you have a plan on your business, which includes growth, thank you. Business plan, clear and detailed business plan that includes your value proposition, target markets, financial projections, and growth strategy. They want to see your research. They want to see that, you know what, you've conducted a thorough market research to understand your target audience, your competition, and industry trends. They also want to see if there's any intellectual property. So, and then to see if you have secured that intellectual property. So, do you have rights, patents, trademarks, and copyrights? If you notice, the deal room, we did DIRA, we put trademark. The reason is because trademarks, somebody will see DIRA now and just come and pick it up and say, okay, they are doing one DIRA somewhere. So we've put a TN there that it's being processed for trademark. So you need to have all of that in place. If I'm an investor or any investor at all, banks, investors that are VCs that are doing equity, or anybody that is interested in your business, they want to look at how your intellectual property is actually protected. Then they want financials. They want you to create a detailed financial projection. Sometimes it's basic, depending on the stage of the business. If the business is big, I'll give you a good example. I have a startup in healthcare that wants to raise 25 or is it 28 billion naira for a start. That's the nature. They don't have anything except the skills of the founders. That business cannot have a regular technology type of pitch deck or business plan. So that explains why when they came to us last week and we started the screening process, we said to them, you know what, you can't even go with this, because they had a pitch deck model like a tech company. that probably wants to raise $50,000 or $100,000, at the most $1 million. But when you want to raise 28 billion, for crying out loud, you need to put a lot of work into it. So depending on the stage of the business, they want to see detailed, well-curated financials. I want to know the team now. Investors, whether it's banks, whether it's finance companies, whether it's loan sharks, they just want to invest in you or the team. Now, somebody said, oh, loan sharks, they don't, are you sure they're looking for who? The team. I said, when they ask you for your contact details, they want to know who you know, who is backing you or who can back you. That data, that algorithm is checking on who you are, who is running that thing, who is this person I'm giving money to. So the people that build, they want to know, they want to work with people that build a strong and experienced team that has the necessary skills and expertise to execute that business plan. Now, I always say, and we will get to it in the course of this session, if you are not the right CEO for your organization, step down. Please don't bother. There's one of our deals that we've told the guy, you cannot be the one fronting for the business. If you want to talk to investors, get somebody else. And these are hard truths. You can be CEO, but you cannot sell the products. Then find somebody else who can do a good job of it. So the team is important. Who is driving it? Does the person have, so by the way, operational skill is different from strategy skills. You could run an organization down if all you have is operational skill. And you could run an organization down if all you have is strategic skills. You need a combination of the two. But investors are looking for strategic CEOs, people who can drive an organization. You know the reason. If, for example, I'm driving DealWoman and I've driven it for some time, and investors, and I'm talking to investors, they could say, you know what, do you actually have the strategic skill to drive this organization into its 10, 15, 20 years? These are hard questions I like SMEs to answer. Do you have the skill to drive your business? Or you just, we were in a strategy session for a business last year. And we said to the CEO that you cannot run this business and get investors. They agreed with us in the end. There's a certain age that you are in, investors will not want to put money there. Banks will leave you. They may not tell you. They will just leave you. There's risk assessment they will look at, and the personnel does not fit, and it's off. So in the course of this program, we're going to look at how you build your team and who is that. So let me give you what I've done in the deal. I'm about 49-year-old now. So the average age of DealWoman staff is about 35. That means that anyone that I recruit that will get into to work with me in this organization has to be below 35 years, no matter what you do. No matter how beautiful you are, you have to be below 35. To make it better and ensure that the average age is still strong, we're recruiting at 25-30 level. It's important to drive this business. I can have people that are with me and we're all like 35, 40, 45. We are old. It won't work. They won't see us as a typical technology company. These are hard truths, ladies. So you need to check your business, where it is, the team. We're going to dwell more on it. So investors, we're looking at the end from the beginning. We're looking at where we're going, where we need to get to at the end of the day. Now, the pitch deck, you need to be able, like I said in the first session, the business plan is elaborate, how you do your things. The pitch deck is a story that tells a clear, concise story about the business, the market opportunities that are there for the business, and why you are the one that can give you that money. Two different documents saying different things. Enter. What is your fundraising strategy on investor readiness checklist? And be clear what they are. Some people are looking for debt. Is what they should go for based on their business, where it is currently. Who are your target investors? Is it debt? Is it grants? Sometimes we sit so much, my experience, on grants, 1 year, 2 years, 3 years, creating business for another person. They've gone. By the time you eventually get your grant, you don't have a business. So your funding strategy, what is it? You're starting with a grant, and I always say for some types of business, start with a grant. We'll go the debt, and then we'll do equity. Or we just go the whole route. We just get equity. Some debt, equity, grant will not work. Just go for debt. What is your funding strategy? In all of this, they want to see, you want to conduct a due diligence, because they will conduct due diligence on you. So you're looking at your organization and presenting your company's financial, your legal documents, and other relevant documents that may be important to you and to the investor. So they want to see all of this. You can't afford not to, sorry, my screen, okay, so I'm trying to get this out right. So you can't afford not to have your organization. That's why we talked about the data room. Due diligence, they will need to access that data room to pick some of those things. Your legal compliance. CAC, Lagos State is really hammering on something now about pay. I think, is it LIRS for workers and all of that? Audited financials, permits, registrations, they are heavy on it now. And I'm sure it will go across Nigeria. How positioned are you? Now, if I'm an investor, I'm going to look at that. If you are not putting together anything, I won't touch you at all. And that's why when banks do their due diligence, they tick, 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 tick. Back end, they just sign on that. No, we apologize, you can't get the money. Or they just go through this never-ending route of back and forth. The other one is social and environmental impact. So many of us are doing stuff in impacting the environment, like we're doing gender-focused program right now. If we do not accentuate it, investors that fund based on impact will not look at us. And a lot of women can benefit from gender-based funding if they can actually highlight their social impact and environmental impact goals and initiatives. So this is not for everybody, but if it's applicable to you. But because you are a woman-led business, there's several funds you can access if you can highlight this. The exit strategy. Now, what is the exit strategy for investors? How are they going to go out? You're going to talk to your bank. You don't know how the bank will get their money back. If you can't figure it out, they figure it out for you. It could be negative or positive, which is why a lot of time the transaction delay on the table, because they can't clarify how they get their money back. All right. So at times you want to also exit through different, for those that will be doing equity, like somebody asked, how do they take over your business? If you do the right things, they don't have to take over your business. You can exit them by another investor. So let me teach you, explain how it works. An investor invests in your business today and maybe invest $1,000. You can sell that $1,000 maybe at $5,000 to another investor that will buy it and pay this person off. can sell that $5,000 at $50,000 and you pay the other person off. You don't have to take over your business. It depends on the exit strategy. How is it defined? In the case that we all refer to that they took over their businesses, there is always an IPO strategy, which is to exit through the stock exchanges. And there are 2 or 3 exchanges in Nigeria, NGX, there is FMDQ, and there is the NASD. To exit, if that clarity has been put in place from the onset. Then communication. Investors want to see communication. They want to see transparency. They want you to be responsive to their queries. Updates on your progress and milestones. A lot of us are not talking about anything, including us in the deal room. We're not talking. In fact, in recent times, I've had, oh, I didn't know what you do. I didn't know you did. I didn't know you did. We've not really been talking. And we women, we are like that. We give. We don't talk about ourselves. We don't come back to us. And it affects our businesses too. I'm guilty of that. In fact, 90% guilty. So sometimes you just pop up somewhere and they're like, where is she coming from? Oh, I've been around. So we need to tell the story. We need to communicate it. We need to communicate it nicely. Then we need to practice pitching. The first time I spoke to Mr. Kiari, that I wanted him to be on the board of the deal room. In fact, I wasn't on the board. There was no deal. I was just, these ideas are. And somebody said, oh, you can reach out to this person. He may be interested in what you're trying to do. So I gave him a call and he said, oh, Comfort, I'm about taking a flight. Can you tell me in 1 minute what you're trying to do? And in 1 minute, I pitched what you see today. 1 minute. I pitched because he was taking a flight. So where was he going to? I think he was going, I remember he was going outside the country. And he told me, I'm about taking it. And in space of seconds, he responded and said, wow, I've been trying to do this thing. I've been trying to set it up. You just took it off my head. That was his words. In his words, you just took it off my head. When I get back, I'll reach out to you. Call me at so and so. That was it. Can you pitch in 1 minute? Can you pitch? And the person will see value and is ready to go with you, put money, put his life, put everything, his career and everything in 1 minute. Pitch practice. Practice your pitch with trusted advisors, mentors, or peers, which is what we will give you the opportunity to do within this accelerator. Network. Build and maintain a strong network of advisors, mentors, and investors to support your business growth. And then operations. Ensure that your company has sound operational practices in place, including systems and processes for managing finances, operations, and team performance. From day one, DealWoman has audited reports from the year it started operations, from day one. You have no excuse whatsoever not to have your audited reports. Doesn't cost anything. We have partners that can come, do it for you, discounted, and you're ready. So these are deliberate checklists for you. I thought I should take this checklist first. So I'll stop here. If you have any questions, ask me. Before I run through my original slides, this is supposed to be a checklist. And I've done my 15 minutes already. Any questions? Any questions on this checklist? Because we'll be ticking as we go on the program. Any questions?
Hello.
Yeah, go on, Adeyinka.
Yeah, sorry to maybe taking you back, but I didn't quite understand the Lagos State tax issue that you were talking about, the LRRS. Because I don't, my own idea, my product is not a physical product. It's a social platform. So I don't know, how does that work with the LRIS thing? Thank
No,
you.
by the way, we have a social, I'm on the board and management team and also a co-founder of Sponsor a Child Through School. It's an NGO, and we've been around for 15 years. And we've sent children to school from 0 to university in the last 15 years. So the requirements are for your staff that work with you. I think I heard the adverts and I remember that my auditor was asking where is our payroll so that we can start to report payee, I think, and then individual tax for Lagos State. Now, the FIRS tax is federal, but the Lagos State is individual tax. And you need to do it for all your employees from a certain level or number of employees that you have. When we have the auditors coming and the accountants, they will expatiate more on this.
Thank you.
Thank you. So any other question? Any questions before I go on to a master class I want to share with us? There is a master class we share in the DealWoman most times. What's that? Okay. Okay, where's my master class? Okay, just a moment, please. I think I'm looking for a particular document. I think I closed that. So, but if you have any questions, you could still ask. If you need clarification, please do ask me. Okay, so I'm here again, and then I can share this. So I'll run through the slides again, and then you can ask questions. Okay, I'm being told that I need to, can everyone see this?
Yes, I can see.
Okay, right. So in fundraising, we teach this a lot of the time in the DealWoman. So I'll run through it again, and then you can ask your questions. So access to finance for startups and SMEs. So this covers both startups and SMEs that are looking for funds. Now, we want to talk about access to finance, the funding options for startups and SMEs, getting your business investor ready, the investors category and due diligence on investors, what investors are looking for, key funding considerations, allocating shares to investors, and business valuation. So please, when you're done with this session, you can read it. We'll drop it in the group. You can read it again and then ask questions. We already know that. So SMEs, businesses, they need funds. What are the funding options for startups and SMEs? Bootstrapping. So a lot of us have done that. Starting your business with your savings, and then you build and you keep building and you build this. Friends and family. Friends, families who believe in your business. Some don't even believe. They just say, okay, you are my brother, you're my sister, just take and go. I've done that a lot of time for a lot of people. Angel investors. These are individuals. Angels are individuals who provide capital to startups or businesses in exchange for equity. They often have experience and networks that can help the business grow. Venture capital. We have VCs, we call them VCs, who invest in high potential startups or businesses in exchange for equity. They typically focus on companies with a proven business model and scalability. We also have PEs in that area, so PEs and VCs. And there are also crowdfunding platforms, and there are different types of them. They provide opportunities for businesses outside of the country. There are a lot of them. I think there are 1 or 2 in Nigeria where you can raise large amounts of funds. And there are different types. Some are reward-based. If you do this, if you meet up this, and then you get this. Some are equity-based, and some are donation-based, like GoFundMe. Okay. So what are the funding options for those that are non-traditional, for example? They're looking like bank loans, micro loans, government grants and subsidies, corporate partnerships, accelerators, and incubators. So there are accelerators that are doing this, but at the end, they will give you money. So there are several accelerators that are funding or supporting women and having programs. So I've run through these: bank loans, micro loans, government grants and subsidies, corporate partnerships, accelerators. Now, the investor perspective, whether they are angels, whether anything, what do you need to keep in mind when you are dealing with investors? From their perspective, what should you put in your mind when you want to raise money? The investors are looking for market opportunity. Every investor will assess the market size, the growth potentials, and they want a sizable addressable market. Whether it's debt, whether it's loans, micro loans, anything. They want to just understand that you have a market for it. They need a strong team. I don't want to emphasize this or overemphasize it. I've talked about it. They need a very strong business model. At the end of today, we'll drop the chart for the business model as well. So you think through it and then we'll discuss it on Wednesday. Okay, that will be tomorrow. We'll drop it tomorrow. There's no sessions tomorrow. We just drop things that you should read. Now, they're looking for traction, that you've done this before, especially those that want to give you equity or long-term debts. Now, by the way, debts can also be long-term. It means that they give you money, but they don't take equity. They're taking a return over a period of time. They will take their money back. Some is convertible debt or convertible equity. That means that if it's equity today, it can turn to debt. If it's debt today, it can be turned to equity. Then they want scalability. They want to see that you can run this business and scale it. If I give you money, would you just become a one-man business and stay there? Or you become a 3, 5, 10, 20-man business if I give you money? So you grow. They want to see that scalability. In some cases, they want to see that you can scale across Africa, across Nigeria, across 36 states of the nation. Or I'm just Lagos, really? So a lot of this, they want to do the see your exit strategy. I have talked about this. Risk mitigation, they want to mitigate their risk. So that's why they will decide, okay, between A and B, where do I put my money? The risk is lower here. Let me put my money in B instead of A. Financials, the valuation for equity, they want to see how you determine your equity and the value. Is it reasonable and based on market standards? Then they want to see, they will conduct due diligence. So they are going to do all of this. So in summary, what are the investors looking for? They are looking for industry that they are familiar with or have interest in. So don't go talking to an investor who wants to invest in spa, women beauty care products when you have an agric project. That's why the DealWoman is here. We curate based on the requirements of the investors, what they want to fund. So that's the error. So when you're talking to different investors, you may be wasting everybody's time. And they won't tell you most times, they just collect and dump it. But if you are speaking to the industry focus that they are familiar with, then they are interested. Like I've said and reiterated, they're looking for management team of the business. Who is managing? Who is going to be at the helm of this business? Then they are also looking for ideas with large markets and competitive advantage. Large markets. Then they are looking for a company with momentum and traction. You keep moving and gaining traction. Or you raise money today. I give you this money. In 3 years, you've grown your turnover by 100%, or you are still at the same level. Then they are looking for ideas that generate cash flow, especially for banks. They are heavy on your cash flow. Where is the money? Where is it going? Follow the money. So if they cannot follow the money in your business, they will not put 1 naira into it. So what do we then do? Successful SMEs, successful access to finance for SMEs requires a combination of different funding sources and a deep understanding of investors' perspective. So entrepreneurs should align. DealWoman, powerful women here. Please align your business funding strategy with your business goals and continuously communicate that progress to investors. Now, this chart is just to elaborate on types of funding. I hope everybody can hear me and see me. Can you hear me? You can see me? So,
Yes, ma'am.
yeah, so you'll see that there's one I called on one side of the chart, I said dilutive. So these are funds that if you get, they will dilute your equity. You will lose, you will have to give them shares. Venture capital, private equity, angels, super angels, accelerators, you have to give them shares in your business. Every time you engage those people, you have to give shares. The non-dilutive is self-funding, grants, and debt or risk capital. That is, if you take a loan, is non-dilutive. If you self-fund, it's non-dilutive, you don't lose equity. If you get grants, you don't lose equity. Now, the sometimes dilutive one is friends and family and crowdfunding, and then ICOs, coins, cryptos, and all of that. Depending on the structure, you could sometimes get diluted. Now, why this is important for us to look at very carefully, I've been in this business long enough to know that when family and friends give you money, they are not quiet. They are just on one corner looking. The day you blow, really blow, they will come back for you. I've had that in the course of, in fact, before the deal room, I've had to settle, restructure, re-strategize for businesses whose brother, whose sister, whose in-law invested in their businesses. The business has grown to be doing a 2 billion turnover. And the guy is knocking at the door. Oh yeah, what is our share in this? After all, we're giving you money. So it is sometimes dilutive. I do not take it for granted at all. I like to ask direct questions. If your husband has been putting money and is not a shareholder in the business, you are better figure out, have a clear conversation quickly. If you have an uncle or auntie that has given you money, please go and be sure that they are not expecting to be co-owners. If they are, quickly begin to solve it legally. Give them shares, there's nothing wrong with it. If you don't want to give them, pay them back their money. Please. Then they're crowdfunding. So you go on to crowdfunding sites. Some they will take debt, some they will take equity. That's why it's sometimes dilutive. So, but note this, usually all pre-seed, self-funding, loans, and friends and family, all convertible notes. These ones are all sort of non-dilutive. So we need to have a clarity on all of this when we are raising money or when you are beginning to talk to investors. It puts investors off when they find out that there are one or two other people that owns the business and you did not disclose this early on time, or they begin to have issues. That's why at times people go to these courts and things, endless battles here and there for tussle for ownership. So we need to be clear who owns what in your business and who owns what. If your children are owning this business, better be clear on who owns what. So like I said, there are investors, all the investors category. We have peer-to-peer lenders, we have family and friends, we have all of that. Business membership organizations, your alumni can invest in you. Savings, high net worth individuals, corporate organizations, banks, personal investors. These are all types of investors that are available on Earth. Okay, so due diligence. You need to ask questions on who is giving you money. Friends, family, whoever they are. You have to ask questions. Number one, who is providing the money? In a VC, you need to know who is giving them money. The examples for VCs that have gone bad is who is giving them money. If you do due diligence properly, there are some we know. There are some investors we don't deal with. We don't even want to see them. One of our deals walked up to me once mid last year, met me at an event, and he said, "Thank you, ma'am." I said, "Why?" He said, "Because of the kind of investor you gave to us." I said, "Oh, really?" I said, tell me more. He said, "Because even when we had issues and we couldn't pay, they were not on our neck. They found a way around it. This is life. This is life." Thank you. They have their business in Ibadan, and these funders funded them. And they've been on this journey for like 3-4 years. I've not had issues. It was him, the client, the business owner, that was now saying, "Oh, thank you, ma, for giving us those type of investors that actually understand." Who is providing the money? What stage of interest are they in? Are they friends and family? That is pre-seed most times. Would they do MVP, minimum variable what products? Would they invest in a small bit of this thing, an idea, like my investors, my shareholders, my board? I hadn't registered it, but they followed me all through because they could see it. What stage of interest are they? Is a round that start when you're starting to scale, or is it seed when you've shown traction? How much can they invest? One of the major noise around the world in Nigeria today of some of this funding that went bad. Another example is the one that, if you look at it critically, the investors didn't have the money. So they were doing a shelf. Okay, I'll give you $1 million. Tomorrow, I'll bring out the 1 million, but I need $5 million. You gave me $1 million. How am I supposed to pay you back? The agreement will give me $1 million, $5 million. But you decided you will start with 1 million. Probably you were fundraising, like I'm fundraising right now. So amount of investment, how much do they really have? We have to ask this question. Do you really have the money? There are some banks you will go to and you say you need 5 million naira. They won't give you, because the business, the bank model for giving you that money does not cover that 5 million. If they give 10 people 5 million, 100 people 5 million, they will close shop. So we must know, this is investor due diligence. This is you conducting due diligence on your investor. So there's the other way around. The investors is conducting due diligence on the clients or the business they want to give money to. This is you saying, you or that investor, what exactly are you coming here to do? You have questions, critical questions. Are you giving me a pre-seed? Are you giving me loan? Are you giving me debt? Is it a round? What exactly do you want to give me? Then the next question, value add. Or guy investor, what are you bringing in, if anything, to this my business? At times, if you just get investors that bring in money and they don't bring any other thing, they stifle the organization, because you need more than money to move organizations forward. And I say this all the time. You must have a combination of a strong board. So if they are investors, we will know. If they are investors in cash or in kind, you must know what are they bringing to the table. If I'm going to get an investor on my board that would take 5% of my company and give me access to market worth $10 million, I will collect that investor. Do you get? So that is the kind of things we need to answer here. Just a minute, I need to move this up again. Okay, so I'm not able to see my screen. So how much money can they deploy? How much money can they deploy? You need to ask yourself that question. How much money can they deploy? Okay, so I've been told that my time is up. I need to move something up, sorry. My timekeeper is on my neck. All right, so how do they make money? What is their motive? You see, when someone asks a question, the lady that asked the question, I was smiling because I knew where she was coming from. But these are the questions so many people don't answer before they go on signing so many things with investors. How do these investors make money? How do they want to make money? Do they want to make money by collecting my business? Or they want to make money by me making money? Or by me expanding? Or by me getting more impact-driven data? And then they are comfortable. What's their motive? So I'll run on this so that we can go quickly to the end. I know my time is fast spent. I'll jump this and then go into this particular slide. I want to say something important here. Right. So get your business model right. In investor readiness, what we're going to do is to get your business model right. Get your figures right. The problem here is most times we find people hire scattered accountants. Please note me and don't forget this. People laugh when I say this in training sessions. Scattered accountants, shattered accountants. Please get a smart financial person to look at your numbers. If a scattered accountant manages your accounts, you are scattered. If a shattered one manages your account, then he has shattered the entire thing. And there are real life examples I can give you in the course of this session on scattered accountants, shattered accountants. A scattered accountant that doesn't know how to use Excel to update and he will be doing it manually. Or a scattered accountant that will finish, put it all together an audited report, send it to FIRS, LIRS, FIRS rather, and the tax has gone, and then we look at it to be able to test their investor readiness during screening sessions and find out that the data do not align. As a shattered accountant, he has shattered the entire thing. Get your legal requirements right. Don't hire a real estate lawyer to handle your corporate finance issues. There are real estate lawyers and they parade themselves as lawyers. Get a corporate lawyer who knows what a corporate requirement is for your business. In fact, look for the one that specifically has done things in your sector. We have two lawyers in the deal room. One deals with all the CAC razzmatazz. Go to CAC, the board documentation. That's what he does. He cannot be our lawyers in terms of our agreements with investors. We have another lawyer that does that, who has an understanding of dealing with global investors. as small as we are. It doesn't cost an arm and a leg. I'm telling you, all of these things, 50K, 100K, some cases, so it depends on who you are talking to. Now, get your corporate structure right. No harm in an advisory board for early stage businesses if you don't want a full-blown board. But if you have a strong business that has grown up and you know that you are not able to, you have exhausted yourself, get a board. Get a board of directors who are active. I've also seen hundreds of dormant boards. When we wanted to restructure, update whatever I want to do, the board will say, you say, well, go and get a trial session, go and do a trial session and tell us if there was during COVID, because we registered before COVID and then we started the deal room in COVID. And they were asking, are you sure this model will still run during COVID and post-COVID? So post-COVID, the board said, no, comfort, we won't do anything going forward. Go do a strategy session. Pay for a strategist to conduct a strategy session. On my own, I will not pay almost 2 million naira for anybody to come and do strategy session for me. But I paid because the board insisted. And it got us from where we are to where we are now and flying because the board insisted. Get your documentations right, which is the very at the heart of this accelerator. DIRA is supposed to help you with documentation. Ensure that you are document ready. Get the right investors. Any fundraising typically is 6 months. If you have gone around raising money for 6 months, it's assumed your business is wrong or bad. So get the right investors in the room from the onset, so you don't have to go with the wrong ones for 6 months. Please note this. And then you're already doing the last thing, which we always say, get pre-screened. And then in this case, we're just going to log you up into the deal room. Right. So for valuation, I'll run through this because we'll talk about it in the coming days. It determines how investors' perception of you. And why do business valuation? Because you're selling or buying business, partner buyout or buying, buy-sell agreement, succession and estate planning, legal disputes, business expansion, mergers and acquisition financing. And then maybe for your management information purpose, like I did, I just wanted to know what's the value of the deal room, and then just got evaluation done. That said, there are 3 fundamental measures of valuation: assets, what do I have, market approach, and income approach. I'll leave all of this for quickly because I know that we have just about an hour left. How many hours do we have left? How many minutes? So that we can take Q&A. So for those of us that said that investors are looking for how you value your business, your customer relationship, your contracts, your trademarks, trade names, your internally developed softwares, your in-process research and development, your vendor agreements, your non-compete, non-solicitation agreements, your trained and assembled workforce, your applicable licenses. They are tangible assets that are come to play in your valuation. Whether it's a market approach, whether it's any approach that you're looking at. So whether it's income, whatever it is approach, those are the tangible assets you can look out for. And we classify them under marketing, customer, technology, contract-based, artistic, or other intangible assets. Now, under the market approach, this is when you rely on what happens outside. What's the market saying? What's the stock exchange saying, for example? The price of another share will determine, I can have an idea of, okay, this is my value. And then You can look at the income approach. If I invest money and time, how much will I bring into the business? All of your financials should be able to do this. If we do a good job of it, we'll give you a template that can help you design this. If you give us the right figures, we give you that template, you work with it. It actually rolls out all of these valuations in splits of seconds. So I think you should have that, and you see exactly have an idea of what your value looks like based on your income. All right, so ordinary shares, types of shares you can give to investors. You need to be able to answer all of this. Ordinary shares, deferred shares, non-voting shares, redeemable shares, preference shares, cumulative preference shares, redeemable preference shares. Which shares? It cannot. So sometimes you can give somebody a non-voting share. Can you hear me? We have a distraction. David saying, please, can you mute her, please? Right. So what are the types of shares that you can sell off to your investors that are available to investors? So that's what we have here. I'm rushing now. Okay, this is the story of a guy. I'll drop this thing on. I saw this some years back and I smiled. Super votes and the rest of them. So we'll take it later.
When it came time to kick me out of my own company, they called a board meeting. I'm like, what do we have a board meeting for?
Can we all hear you?
So I show up, basically they jump in and basically say, we're done with you. You're getting fired. Turns out I started laughing. As an entrepreneur, I will always go with my gut, but when somebody presents, this is what I always tell my business partners. If I'm a 50-50 business partner, I have, hold on, real quick. Okay. 50-50, yeah. Always. Here's the problem that I found with 50-50, and again, you've had it already solved, but I can't wait to hear you. So you've had success with it. Someone asked me the other day what percentage, and I said never 50-50, always 51-49. And the reason why is if two people have total equal shares, there can be an impasse, and now you have no ability to operate. There's two ways to do it. If you set up an LLC in your management agreement, you can write that Sean has definitive answers on all things. Well, you know what I did? And thank God I did, because there was a Steve Jobs story. They tried to throw me out of this place, and it's my place. Because they had 66. That's where it began. And then throughout the history, we brought on a few people. They talked me into doing this and that. I mean, I still have one partner. He's the one that I found to build the shit for me. Without him, we wouldn't be here. And without me, he wouldn't be here. It says it. I have a super vote. Well, they didn't read that. When it came time to kick me out of my own company, they called a board meeting. I'm like, what do we have a board meeting for? This, that, thing. So I show up, and basically they say, we're done with you. You're hired. Turns out that super vote was genius. The super vote, that's what I have in mind. I started laughing, and I said, dude, you guys better go. You guys better go get a lawyer. The way you're fired. Employee is the top. He's got full authority. The only way you can control a CEO is to get the board to control him. But you have the super vote. I had the board and I'm the CEO. So I fired him as an employee and I blocked all their stupidity as a shareholder. So thankfully.
All right, so that's the end of that slide. Any questions, ladies? And then we can call it a day. Please unmute, please. You are unmuted, please. And maybe we can see our face right now as we end this session. Any questions for me? Please raise your hands and then I can take questions. If you have any question, you can also type it. Any questions? Hello? Can everyone hear me?
Yes, we can hear you.
I hear you.
Yes, ma'am. We can hear you.
So did you people hear I'm done with the presentation, or did I lose you? Or you lost me?
We We heard
not
all
at
you
all.
said,
We're here.
and okay. We are with you.
You guys were like, really? Or what exactly happened? Everybody just went quiet.
Yeah, I was blown away.
Right. So that's any questions? Any thinking? Any confusion?
I wanted to ask you a
Actually,
question.
from my
I
class.
wanted to ask you a question, man. My name is. Hello, can I talk?
Yeah, raise your hand so I can take the
Okay,
question.
sorry. Okay.
Go ahead. Go ahead, please.
Okay, my name is Chinoya Jene. I wanted to find out. I'm listening. There are so many things one needs to understand from your. It's very informative. What you've given us today is so informative. And I'm just thinking through that at the end of this week, we're meant to come up with a business plan model, I believe.
No, at the end of this week, your take home will be your business model. Yes, it's a basic sheet. Don't worry. No big
Okay,
deal.
so we're going to get some form of template, right?
Yeah, we'll send you templates. Yeah, you would. It's something you just feel in, but this is helping you answer some of the questions.
Okay, ma. Thank you very much.
So, any questions? Any other question? So we have an office hour technically right now. So any other question? Any questions that any challenges you're having on your fundraiser? Right. Well, it shows Hiva Fabrics right here. So maybe when we come on every time we're on Zoom, please, let's just have your real names typed out. Maybe your first name so that we can just go by the first name. All right, you can ask your question.
All right, thank you so much for a wonderful session. So my question is, when you were talking about valuation, you were talking about trademarking and intellectual property and creativity. For someone like me in my business now, we do design fabric for people, like we design the print and then we print it out for people. So for that kind of thing, how do we value that in calculating it is what I mean, Ma? Because I don't know how we'd be able to calculate what you think is the value of something that comes out of my head for me to be able to use it to value my business.
Is there a standard for property rights? I think so. I've worked with a very not so big brand, but a big fashion brand, and there are a bit of some advice there, especially with designs. So we research that right to do. So question is, what are the Zara's doing? The Ichobasi, Vicky J, something she. We need to check and ask ourselves what are the. So who is mute, all right, so any other question? I hope, did I answer your questions, please?
Ma, I couldn't hear anything. I couldn't hear anything.
Wow. Okay, Onyechi, please, can you be muted? Can you mute yourself? So attendance for this session, yes. It should have been dropped by now. Right, yes, there's an attendance for this session, please. Okay, right, so I was saying that, yes, that I've worked with Hiva Fabrics. Can you hear me?
Yes, ma, I can hear you.
So I've worked with one or two fashion brands, and we did a whole lot of very detailed work with them. And there's a way we actually try to work around their IPs and the intellectual property in terms of the design that were coming out from the firm. So I know that there's one or two because she studied in the London School of Fashion, was it London Fashion Academy or so, the renowned one. I think there are two. So like I said we can ask, what do they do? We need to know. And then we'll come back to you on that. We'll also do some research and see. Yeah, there's a way you can then value. So if I'm going to think top of my head how we value them based on churn out and the skill and the ability for them to churn out unique and proprietary products or garments from their factory, because they had a factory. So we need to look at that critically, and you need to know exactly which of the types of IPs or is it trademark that you're going to utilize for this for what you're trying to do. But in the course of doing your valuation, you can meet me up in an office and we can look at it.
Okay, thank you very much, Ma.
Thank you. Any other questions, please? Anybody? Any questions? Anybody with any other question? We need to go. Please, you need to ask us all the questions now, because it is this engagement and your understanding of it.
Hello?
Will help. Hello? Yeah, go on, Victoria. Hello?
In fact, I've not been able to join since morning. I had difficulty joining the group since morning. I'm just able to join this section now.
Oh, okay.
It's so painful that I've missed a lot.
Right. Okay, so sorry.
But I think I just had about evaluation.
Okay. We'll see what we'll do to actually help you to ensure that you scale through the first week. Maybe you talk to Marianne. So what we're going to do is so many of the our materials, especially the recorded versions, will be available on YouTube, and so you can go there and just listen to it as soon as we download them. Bring yourself up to speed. Is that okay, Victoria? Okay, she's gone. All right. So any other question? Any other
yes,
need?
Ma. Yes, ma.
Right. Thank you. Any other need for clarification, please? Unmute yourself, please. Yeah. Adeshide, please, you can take, yeah, you can go on this.
Okay, good afternoon, and thanks for all the information. It was quite a lot to take in at the same time, because I'm currently on that bit where I'm writing a business plan, talking to people, but again, trying to know the right people to talk with. Now, my question is, having a business, a small business, and you're trying to upscale, and you know, if you upscale, you make more profit, like probably space expansion, rendering more services. Now, let's talk about the financials. The financials are not looking great, because you're not having, maybe point one, you're not having returning customers yet. People don't yet understand the brand or buy into it. Now, when we have to do this business plan, business model, how do we do that aspect? Because now investors want to see, like, okay, you this business, how much do you make monthly? What is your annual turnover? And it's not looking good. Are we going, again, I'm sorry to say that, are we going to play about with figures, or we're going to say, you know what, when we upscale, this is what we're going to get if we have like 6 to 10 customers coming daily for services and products. So that's my point on that. Because when they want to see the bank statement, they can see the inflows, but they're not like, you know what, this is not it. So how do we deal with that aspect?
All right, so the simple thing to do, thank you. The simple thing to do is this. The Excel you'll be giving is probably what you will use. Whatever you've done, you need to understand what the market is. So for example, if you're selling, what do you sell? So what are you selling? Let me walk with
you. Spa, render services and products.
Products, spa, right?
Spa, yes, render services and products.
And products, so you render services and products. Who do you sell to? Small, medium, who are your typical clientele?
So I'll say from the age of 20 to 25 age group.
Okay. And who are those that have been buying from you? Who is making the payment decision, the paying decision?
Is it the age group or what information do you want now?
In your business, who makes the decision? Because you mentioned those in their 20s. Is it those that are still with their parents or those that are working?
Okay, so now, okay, no, sorry, let me take it back. Working class, that are the ones that buy, yes. Apologies, yeah.
So that clarification is really very important. So they are working class, but younger working class that wants to come to the spa. And so your spa is one-stop shop, right?
Yes, it is.
Okay, so it's a one, but you don't have the number of customers yet.
Yeah, because it's more of a, so it's more, that's what I was talking about expansion. So it's more of a like one treatment room, and most inquiries we get.
See, I go to a spa once in a while. That once in a while, 5 years. So maybe I'll come to yours one of these days. So I that's just this small cubicle 2-room apartment that is nicely done. But she has this manner, and then we start there, and then the bedroom is very tiny. I can barely shake my body like this, you know. But she has grown. She has grown. I mean, I don't want to mention it. She has grown. She has expanded. So the people moved that she's gone to a 3-bedroom now. She has grown. If I was investing in her at that time when she was in that small place, I would do a projection.
Okay.
If this is my small place, I have one person. If I get 1 million naira, I could add 3 people, and this will be my income, and this is how I'll pay you back. That's why we do projections. So for your case, it will be projections based on where you are. Because come to think of it, startups don't have anything and they get money, sure you know.
Exactly. I know someone that actually did that. So he actually requested for my projection, and I should project how many customers will come in, will buy either for coming for services or that, then with the price. So a range.
And the week 2 will help you get through that. That shouldn't be good.
All right. Thank you so much.
Yes, you're welcome. Any more questions before we go? Any more questions? Hello, ladies, powerful ladies. Any more questions? Okay, I assume we're done for today. It's not submitting. The links is not submitting. Okay, maybe they'll drop. Do you want to? The link is not submitting. Can you check? Sorry? Okay. All right, so I think we're done, except we have any more questions for today. So don't worry, the activity for today is just to read up what we have and tell me on a scale of 1 to 10 where you are. Are you investor ready? I will drop the scale and you tell me exactly where you are. So this scale, we'll test it again at the end of week 3 and see where we are exactly. So be true with the scaling so that at least we're able to monitor the progress of your investments, your fundraiser. So thank you, everyone. This is all signing out today. I hope you had fun. I hope it's funny. I don't think it is. It's a lot of information to put in. So
yes,
so we are trying to make it as simplified as possible. So the slides you see, they are friendly. If you want us to change anything, please, we're going to drop like a form, a feedback form. What do you want to see? What do you want us to do differently today before the business closes today? So we'll see again on, we meet again on Wednesday, 12 noon. But we'll drop to do activities today and then this session as well. So thank you, ladies, and have a beautiful evening. Bye. Yeah.